Hey everyone, we got some big news for SoFi stock investors. I'll share with you what that news is and what it could mean for SoFi stock investors, both in the short and longer term. So without further ado, let's take a look at the latest development.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the big news here, in the latest quarter, SoFi grew consumer deposits by a record $3 billion and saw continued strong buying demands for their loans, selling over $1.9 billion in loans in the first quarter. So let me take these one at a time. Consumer deposits increasing by $3 billion is really big news for SoFi, given a couple of factors. Number one, SoFi is a relatively newer bank, only a couple of years old in terms of attracting its bank charter. So it's competing against the likes of Bank of America, JP Morgan, Wells Fargo, and other bigger rivals, and taking deposits. And that's good news. That demonstrates a competitive edge that SoFi is able to attract deposits from those banks. Number two, remember, I want to say a year and a half ago, there was that big bank scare that had consumers running away from smaller banks and taking their money and putting it into bigger, more reputable so-called banks like JP Morgan and Bank of America, because the insolvency risks that consumers started to fear at that moment. But despite those fears and despite the exodus from smaller banks into larger banks, SoFi maintained deposits during that turbulent time and since then has continued adding deposits. Now, one of the reasons SoFi has been able to, in addition to its excellent website and app, is a bonus it offers. It offers $300 for folks switching to SoFi, meaning if you have a direct deposit right now with an existing bank, you switch over and you go to SoFi, they'll give you $300 to get on board. And that $300 has been enough to get people to make that switch, because ordinarily it's extremely inconvenient to switch your bank because you have all of these accounts set up already, like direct deposit, like bill pay, and other automatic payments, that if you were to switch from, let's say, Bank of America to SoFi, you would have to switch over all of those direct pay and direct deposit, lots of paperwork, a hassle, right? So by giving customers that $300, they say, okay, that makes it worthwhile. That makes it worthwhile. I have to spend a little bit of time. It's annoying to make that switch, but you know what? SoFi is a better website, better app. And my current bank has a terrible website, terrible app, doesn't perform well, doesn't offer all the services that SoFi offers. That money makes it worthwhile for me to switch. So that's how SoFi is attracting customers. The lack of a physical presence, not so much a downside for SoFi, not so much a downside. And that's just in the near term, though. That's just in the near term. Longer term, these larger banks are likely to launch a response to banks like SoFi if they were to attract larger deposits and show a competitive advantage online. They're likely to respond. Not unlike, remember how 5 years ago or 7 years ago, people thought brick and mortar businesses like Target and Walmart were dead, that Amazon was going to kill them, and their brick and mortar locations were a big headwind to the business? They flipped the script now. Target and Walmart are now utilizing their brick and mortar locations as an advantage against Amazon with the buy online and pick up in the parking lot feature that consumers absolutely love. They can get their items in about an hour versus waiting up to 2 days with Amazon, as fast as Amazon is. So don't sleep on these physical brick and mortar banks. They've underperformed. Admittedly, their performance has been awful, terrible, I will say. Being a member of several of these banks, including Wells Fargo, Bank of America, Citibank, and all of those big banks, their performance, their customer service has been really bad. They understaff their locations. lines are long, the merchant bankers, the offices are empty. And so the point of having that physical brick and mortar location, they haven't utilized, they haven't capitalized on that. But I don't think they're going to let that continue. I think if they identify it and make it a strategic imperative, they can improve the performance, and that could provide a counterbalance to SoFi's growth. Now, the other thing here, selling over 1.9 billion in loans at Q1, that's the other part of the equation for SoFi. For the bank business, now it has other parts of its business, but the bank business is, over 60% of its business right now. It needs to be good at attracting deposits, right? Which it's demonstrating it's really good at attracting deposits. The other side of the equation is making loans. And when it makes a loan, it has a choice. It can either keep those loans on its balance sheet, meaning it can service the loan. Let's say SoFi makes a loan to you. You can make the payment to SoFi, and SoFi will obtain or hold on to your loan. That means if you don't pay, SoFi will lose the money. Or when SoFi makes a loan to you, it can sell that loan to someone else. And it can say, all right, our part of the deal is done. We wanted to make the loan, and then we sell it to somebody else, and that person pays SoFi for the amount of the loan. And you might say, why would SoFi do that? Because in that process, SoFi is going to charge you fees, etc., and it will make money based off of those fees instead of making money on interest expense that you will pay. And it will sell your loan to the third party that's buying it at a premium price, because now the person that's buying it is already buying something that's nicely packaged. The loan has already been made. All the hard work has been done. And now all that person has to do is collect payments, which, by the way, it can assign to SoFi and pay SoFi a fee to collect the payments and service the loan. So SoFi making good progress. They're selling nearly 2 billion of their loans in the first quarter. That means there's demand for the loans that it's making. That means the loans that are making are demonstrating good performance, and investors are interested in buying those loans. So both elements there, huge and positive for SoFi and SoFi stock investors. And it's no surprise that the company generated a net income of 100 million with a net profit margin of 21%. That's SoFi Bank specifically. SoFi Bank is the most profitable part of SoFi's business right now. Its other two businesses, its other two segments, the financial services and the technology segments, are losing money right now. But the bank is generating all the profits, more than 100% of the profits for the company. So really good news here that the bank, the part of the business that's funding the ability for growth, because this is generating profits, it can then use to invest in its growth priorities, the financial services and the technology business. That part, the core business, is doing well, which can fund growth for SoFi longer term. So really good news here for SoFi stock investors. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.